Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Hey there, hi there, hello there. Welcome to our little get-together that we call a show. We call it Talking Real Money because, well, here's this interesting thing that we do. We talk real money. We actually talk about your life, your dough, how you can make more of it, how you can save it, invest it, spend it better. All those things you do with money are up for grabs, up for discussion, up for consideration on this here little radio show that becomes a podcast next week. Hi, everybody. I am Don. I am in Florida. I just full disclosure. I'm not in the Seattle area. I'm in Florida. Tom is in the greater Puget Sound area. Well, and where he lives, we really, the term greater we use loosely.
Oh, come on. I'm just glad to be here.
It's like,
because I heard Tom
it almost
in
includes
retirement.
a few Canadians in that.
There's a couple of A's rolling around, but I heard Tom in retirement at the top of the hour. I was nervous. They said the highly successful Tom was retiring. Turns out it's the football one. So we're okay. I'm back.
I didn't confuse the two at all. There was no confusion on my part. I went, oh, Tom's retiring.
I'm looking for the 7 rings on my fingers. They're not there.
Not that one.
So
he's got to keep working for a living.
Exactly. This is good. I'm glad to be here. So
I'm glad someone's glad you're here.
Thank you. Well, I'll take that. I'll take anyone. Man.
Anyway, what are we talking about today? Oh, I know what we're talking about. You know how it feels when you go and you look at your portfolio maybe a little too often? I looked at mine because we were going to do this. So I went and looked at mine.
How bad?
And I'm down like 4%.
Dun, dun, dun.
It was so nice because it was just going up all the time. Every time I would look, I'm sorry, I get a little weepy when I even think about it. Every time I'd look, it was like higher, and now it's lower, and it hurts, Tommy. It hurts.
Yeah, it really does hurt. And days, how about like last week when the aforementioned index that shall not be mentioned was up 1,000 points, then down 1,000 points in one day. That causes people to worry, right?
They really should just split it so that the numbers didn't sound so big. If you split it 10 for one, and then it would just be 100 points.
There you go. Be easier. And the only reason I want to talk about this is because when it reaches my doorstep, I'm part of this little text group.
So if it doesn't, wait a minute. I want to make sure I have this clear. If it doesn't impact you, it's not important. Is that what you're saying? If it doesn't
come to my immediate attention.
Yeah. No.
We have very few of our people that call our 800 clients because they know volatility is part of making money. They've been educated.
We've trained them for years.
I'm on this little text group with some of my college friends, and so this week there was a couple of texts in there.
Oh, these are college friends.
Yeah, still alive, and they were like, "I worry more when I see my portfolio and when I'm in my 60s than I used to." I'm like, no, why? Well, because I'm going to need the money sooner. Okay, but let's just talk. Let's just chat because we spend a lot of time on this.
They are not alone. I hear it all the time. I get it from friends and acquaintances. So, wow, this market's way down. What should I be doing? I need to make some changes, don't I?
2 things. Maybe 3. Number 1.
4, maybe 4.
Short-term fluctuations. You got to look at them in a long-term perspective. You know what? How do they say it? Short-term pain for long-term gain. You just got to know it. Number 2.
Yeah, well, hold on. Let me interrupt just on that point. On that point. Because we always think, and I heard this from someone very close to me who shall remain nameless.
Let me take a guess. Got my hand in the air.
It feels different this time.
Yeah.
It feels like it's really going to. Well, we've got the Ukraine thing, and we've got the inflation, and we've got all the economic uncertainty, and the world's just different than it was. It feels different this time. Don't you think I should be selling my? Fill in the blank.
Yeah, it is. Okay, number one, short-term pain, long-term gain. That's the way it's been. That's what we expect will continue. Number two, if truly you're 60% in stocks, you're 60% in stocks, you're down. Don mentioned 4%. That's about where you are for the year, so that's not a big deal. But if it's painful to you in some way, you probably need to re-examine your risk-return sort of ratio and understand who you are emotionally.
And at that, let me add this little point. We hear when markets are going up, when they have gone up, we consistently hear from you that you feel my risk tolerance is really high. I can handle the risk. These are the times that try your convictions. And if you're not holding up in this kind of a market, give us a call, 855-935-TALK.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Yep, no pain, no gain. You want us to help alleviate some of the pain? You got to gain access to a telephone and give us a call at 855-935-TALK, 855-935-8255. I'm Don, that's Tom, shuffling through the papers. Did you lose something? Your mind?
I've always, pretty close.
Yeah.
I find this discussion fascinating because, again, what you said at the end of the previous segment is exactly right. That is, we are all overconfident about what the future will look like in terms of stock market returns after the market's gone up. On the other hand, when the market has gone down, we're all, the world's going to come to an end. It's a fascinating thing. And by the way, neither of which have proven true. I just looked at the number over the last 32 plus years. Had you just taken $100,000, put it in a globally diversified portfolio, you'd have $2.5 million today. You made 10.6% a year, but you had to close your eyes when things made you nervous, like they're making you nervous right now. All those reasons you just went through.
That's what you have to, is what we have experienced so far in January of 2022. Is that more like March of 2020?
I would say no, because that was such an unusual circumstance to have a pandemic for the first time in 100 years, basically.
Or is it 2008? Is it 1987? Where it went way down, turned around, went right back up. 87, though, was fast turn. Wow.
Yeah.
Wow. Or is it 1929? It depends on it depends more on the way your mind works than on the reality of the markets. If you're somebody who thinks that, that this is the end of the world and I'm buying a bunch of gold and the heck with all of you, then you think it's 29. But the reality is we don't know what it is.
No, people are buying gold. The gold ETFs and the money is pouring in.
Over the past 50 years, it's more likely one of the former, based on what we've seen over that period of time, than the latter. We forget that events like 1929 were so black swanish and so unlikely. I read an article recently where it was talking about how we can't expect the market to act like it has the last 100 years, because prior to that, it was much more dangerous. Well, prior to that, we didn't have any kind of, most people didn't even buy securities of any kind. So you can't compare. You can't compare 29 to today, I don't believe. Yes, the market's got to go down. It had to go down. It's going to go down again. Maybe stopping. It may stop Monday and go right back up. It may be another 6 months. But this is as Tom was saying, this is the required pain for the potential gain.
Or you take it to your friendly bank, you put it in a savings account, and you get quarter of 1%, maybe if you're lucky, half of 1%. If you use one of the online high yield savings, you get 0.8%. I'm guessing.
We haven't looked at
I know. Go to bankrate.com to find out what wonderful amount you can make on your money. Now that number will hopefully go up, right? Because interest rates are expected to rise.
0.5% on high yielding savings
there
accounts.
You go. Yeah. Not a lot of money to be made there. Hey, you could lose more than that in half a day in stocks. No kidding.
You could lose more than that in 12 minutes in Bitcoin.
Let's not. We just did that last week.
I know. It was so great, but there's been so much great stuff.
Are we getting any hate mail on that one yet?
No, we're not, because I think people, smart people, are finally starting to get it. I think they're finally saying to themselves, wait, the emperor really doesn't have clothes on. He is stark naked. And we need to just stop playing around with this and stop pretending that there's something miraculous about Bitcoin or any of the other cryptos, and realize that they are a solution desperately seeking a problem to solve.
Or the meme stocks, or the people that went up against the memes. A great Wall Street Journal article today about the hedge fund guy that made all the big bets against all of your posts on Reddit and then went down by like 50% for the year and is trying to get some of that money back in 2022.
But did you also read that he's physically afraid because of the ridiculous response of the Redditors?
Yes.
For whom this has become, and that's basically the article said that, for whom this has become a religion. This is no longer a means by which to make money. They are approaching this, and crypto crazies are doing the same thing. They approach these things with a religious fervor, and it's a little scary sometimes.
Well, I think in both those cases, you're either with us or you're against us. There isn't anything in the middle there.
And if you're against us,
either you're on our side.
If you're against us, it's the Crusades all over again. I'm reading about medieval history, which is why I mentioned the Crusades.
And by the way, I think it was funny in the article they mentioned that they sent him, in addition to hate mail, what was it, GameStop and pizza certificates in the mail. Here you go. Enjoy. Because he was shorting all that stuff. So none of that stuff is, again, when you pull back. And Jason Zweig today writes in also in the Wall Street Journal, I think correctly, that in 10 years from now, are you going to look back and go, oh my goodness, do you remember January 2022? Because he says, do you remember what securities you bought in January 2012, 10 years ago?
I don't
have a recall.
Wait a minute. So, no. In 2012, I was probably buying index funds.
Yeah, probably the same things we were buying in
same thing I'm buying
2002, 92, et cetera. Same deal.
No, 92, I was buying like American Century and Janus and things like that.
Probably was too. Because for a short more time, but then we got religion.
We saw the light. We did. We got a religious fervor. We became zealots. So we became zealots for the truth.
Indeed. And I want to finish the thought. Number one, again, short-term pain, long-term gain. That's the way it's been. Number two, right? Again, you need to know your risk tolerance. But here's the third. As you mentioned, you should not be looking at your balances every day or every week or probably even every month, because that will make you do crazy things when you see the portfolio has gone down and you'll say, I got to do something. So again, we look at our clients' money every day. I only put the numbers into my personal spreadsheet every 6 months. That is it, because it might make me do something bad to my money.
We can look at our clients' portfolios every day because we don't have an emotional attachment to the money. I know, and I've been doing this for a while, I know that when I look and it's way down, I feel that rumbling in my gut, and I know that is an emotional response. That's that fight or flight feeling that you get. You feel the adrenaline pick up. the cortisol and all those things.
That also might be that Chick-fil-A spicy sandwich too, though.
I try to keep it to one spicy sandwich a week. I don't want to. So no, that wasn't the one this week. I think I just had regular nuggets. 855-935-TALK is our number. Give us a call. We got lines open for you.
Tom and Don are talking real money.
At some point, most investors need professional financial guidance. So get a little bit of free help or a lifetime of affordable 100% fiduciary guidance at Vestory.com. Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Yes, we're here for you. 855-935-TALK. We also take questions at TalkingRealMoney.com, and we'll get to one of those in a minute. But, oh my gosh, I wanted to share this with you. Would you like to get 1.5% annualized on your savings?
Your cash?
I know I would. I'm going to go get this. I literally am going to go get this. I was looking at the Marcus thing. Marcus is Goldman Sachs Bank. Mm-hmm. I think they use Marcus to help.
M-A-R-C-U-S.
M-A-R-C-U-S. I think they use that. That's probably the bank behind the Apple credit card, which is through Goldman Sachs.
I think that's right,
sure.
Yeah.
Mark, because it's direct consumer bank through Goldman Sachs. Their rate, their APY is 0.5% with a minimum balance of 0. So, and that's
you
the
can just
highest
go in there and
anyway.
get the 0.5.
You can get the 0.5.
Yep.
But they got a deal going through 2/16/22. And we're not getting paid for this. I just discovered it. I'm just going to go do it myself when I go buy my $10,000 in I-bonds for this year. At Treasury Direct, different place. But if you put $10,000 in, they'll give you $100. Now, if I'm not mistaken, that makes the rate 1.5% over the course of a year.
No, it makes it higher than, that's right. You have to leave, in other words, and you only have to do it for 90 days. So to get the full one, you got to be there for the year. Obviously, they're not going to give you.
No, they're going to give you the $100, but they're going to give you the $100 even if you're only there for 90 days, which can make the rate even higher.
Yeah, because if you're only there for 90 days, then boom.
Right. So you only have to keep it there for 90 days, and it's open to new and existing customers. Huh. Well, that's just interesting.
Okay, so you're going to open an account. I'm going to open an account. My wife's going to open an account. My daughter, all my family, everybody's going to open an account there for $10,000.
Yeah. I should tell my wife to do it.
Yeah, why not?
Really, it's 1.5%.
Yeah, it is.
I mean,
we get so excited about 1.5%.
Whoever thought we'd get this excited about $100? I just, and I'm going to go. I meant to do it earlier. I meant to go into Treasury Direct and get my $10,000 I-bond
per year.
All right. 855-935-TALK. That's our phone number. Again, as I said, you can type in questions. We'd prefer you speak them, but you can type them in at talkingrealmoney.com and we answer them either on the show or on future podcasts. And let's see. This one comes in from Texas. Deep in the heart of
make a wisecrack back Texas because they're very serious people.
Oh, no, they can be fun people.
Okay.
A lot of my family's from Texas.
Okay.
I got family from West Texas all over the place.
They're still sensitive about the last 14
Basin,
seconds
Odessa,
or whatever.
Midland.
Yeah. Okay.
My great granddad was an oil
Love
millionaire.
that movie.
Oil
Love
millionaire.
That movie.
And then lost it all in the Depression.
Wow.
He had a big old house with a cement pond out back.
Really?
Yeah.
In the Permian, over in West Texas? Wow.
And San Angelo, Texas. Which is West Texas. And then they got hit hard by the stock market crash and they filled in their cement pond.
I hope not with him, but okay.
No, I don't know who else was in there. I would like to access about a third of the equity from my primary residence, which does not have a mortgage, fully paid off a few years ago. What would be the most effective or efficient, I should say, way of doing this? First mortgage, HELOC, reverse, some other way?
I got to think it's going to be a first mortgage because HELOC's going to be a higher interest rate. Reverse is going to be going to have expenses there that will be far higher than. But I think that also the thing, if you're going to have some sort of income to go out and get a first.
It doesn't say if this person doesn't say if they have income, but I hope they have income. I mean, come on.
Well, but if you're retired,
but you would still have income.
Yeah, but it might not be enough. In other words, so that may play into it. And I just looked again at the 30-year. It's at about 3.2 now.
Well, I'm looking at the 15 because that's probably more. Oh,
yeah, it
my
depends on the
God.
amount you're going to take out.
Because
those
2.4 to 2.75.
Yeah, it's gone up fairly.
That's still
rapidly.
Pretty darn good.
Oh, yeah, inexpensive money, no doubt. But anyway, so no, I think your first mortgage is going to be your best bet there. I don't know what you're getting for a HELOC these days, but it's going to be higher than the aforementioned 2.5 to 3.5, depending on 15 or 30.
How about another quick question from the Bay Area?
Sure. Okay.
Love your show. Just started listening after hearing you on Clark's podcast.
Yes, Clark Howard.
I heard you guys mention that emerging markets have done very well lately. Do you think that trend will continue? Would you recommend an emerging market index fund as part of a portfolio with other index funds?
The second part is yes. The first part is I have no idea.
Right. Yeah, we think you should have, if you have a properly, really broadly diversified portfolio, emerging markets make sense, but we do not know the future.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
You know, it just occurred to me. There's been a lot of talk in the Seattle press about the call letter changes at Como, because Como Radio was sold by Sinclair to Lotus, another radio group. Now, Sinclair doesn't have any more radio stations.
No, that was the only radio they owned. Yeah.
And so Como, which we're on, is owned by Lotus, and they have to change the call letters because Como TV is different.
Yep.
But I didn't realize until I read the article in the Seattle Times, I did not know that we were a show about bread on a station that was created by bread.
Fisher flour,
And they
Fisher flour. Yeah, right. Yeah. Mm-hmm. Yeah. You're all over it, dude.
I didn't,
feeling better now?
What an interesting coincidence that is. They got us, and it used to be a bread station. 855-935-TALK is our phone number, 855-935-8255. Hey, Lori, welcome to Talking Real Money.
Hello, and thank you for taking the call.
Glad to do it. What's up, Lori?
My son, he's 28. He's just come into an inheritance by his father's death, and he's looking at about $1.2 million. So I'm trying to get some information for him to see where that money should go to, keep it growing. He part of his pension, part of it is a 401k, and then there's also a Vanguard fund. He does have a smaller Fidelity fund on his own. So just looking for some advice what he should do.
Well, there's a couple of things that he's going to be unable to avoid. We'll talk about advice he may get. But first of all, in terms of the retirement savings that was left to him by his father, he will be required to withdraw that in the next 10 years. There's no way around that. So that's one thing.
On it.
And pay taxes. So he should know that.
So he should put aside enough money.
Correct. To pay the taxes.
To pay the taxes for sure.
And then in terms of the rest, because at 28, well, of course, not everyone's the same at 28, but at 28, most people are going to need advice. In other words, as you know, on this program, oftentimes we tell you just go own these 3 funds and you'll be okay. In this case, I'm totally comfortable saying you really need a 100% fiduciary advisor to help your son.
And here's the reason. Your son has an opportunity that few people ever get at all in their life, much less at 28 years old. He has an opportunity to set himself up financially today for an incredibly comfortable, secure retirement. And that should be his goal. Is he living comfortably at 28 on whatever he makes from his job?
He just moved back home. He got his master's degree, and he is now employed. He's been only home since December, and then his father passed earlier this month.
Oh, I'm so sorry. Now, let me just add one other little thing, though. He's got a job. Does he love his job?
Yeah.
I hope. Okay. Because the one thing I would hate to see him do is look at 1.2 million and say, I'm set. I don't have to work anymore.
No, he does enjoy his work. I don't think he'd go to college that long if he didn't enjoy it.
Right. Exactly. What a waste if he did. I think Tom is right because if he builds this portfolio properly and he, if he puts it where it really needs to be put at his age, he really doesn't need to. He probably won't need to save much more for retirement. He can really use what he earns for the rest of his life to live on.
And remember, the money has to come out of the 401k, but it does not have to be spent. In other words, it can come out, pay the tax on it, and be invested post-tax, which has many years to grow. So we have a list of advisors that we trust, that we know at our website, talkingrealmoney.com. You can go there. There's, are you in the Seattle area?
Yeah, I'm in Seattle, and I listen to you guys all the time.
Yeah,
okay.
I would take a look at that. Go to talkingrealmoney.com/help. That's where all the resources are on finding good advice, because with $1.2 million, he needs some tax guidance. He needs some retirement planning guidance. And if he does this right, he will never, ever in the rest of it have to worry about retirement, ever.
Yeah. And that's what we want to do. I know he's got some plans for some of the money, but it's mostly just
of course, spend a little bit. Just don't go crazy. Just don't go crazy. As a matter of fact, if he wanted to buy a house, I would say buy a house with a mortgage and keep the investments intact. You just use enough to make a down payment. Thanks for the call, Lori. Good luck.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Give us a call, 855-935-TALK. I'm Don, that's Tom. We talk money with you. And we were just talking to Lori about her son finding a good investment advisor to help him. And you would think with over 1 million people who claim to be financial planners or investment advisors in America, more than 1 million, that it would be incredibly easy to find a good one. But the reality is good ones are rare. The statistics will blow your mind. Less than 1%. Less than 1% are always required to act in your best interest.
Always is the key word there, because a lot of people hold themselves out as a fiduciary, that you're going to get that advice that is in your best interest, but then it doesn't always work out that way. They're duly registered. This is what I see a lot of, because we ask people all the time, do you know that you own this product that has a big commission on it? Do you know that you own this product that is very expensive? And most people say, no, but when I talked to this person, they said that they were a fiduciary.
Well, but even the fiduciaries they're delusional. They delude themselves. They actually believe they are a fiduciary. I read one ADV from a duly registered broker who sold indexed annuities that said selling indexed annuities is a conflict of interest and conflicts with our fiduciary responsibility to you. And we will only recommend them if we believe they're in your best interests. So all they have to do is say, I believed it was in your best interests because you said you wanted safety or whatever. So that's why we suggest, and if you can find another place for good research, then go there, but I just don't know where it is. Go to talkingrealmoney.com/help. We've got articles on picking an advisor. We've got a video on how to find a good advisor. We've got a list of advisors in the Seattle area, well, actually outside of the Seattle area too, that we believe will act. We believe, we are not endorsing or recommending.
But now we do have people in both Portland and in San Francisco that we know will.
Yeah. Well, and around the country too.
Yeah, that's true.
And we also have a list of a bunch of the big firms out there and whether they're always fiduciaries or not and what they charge. Because what they charge, we're going to talk more about that in the future.
Yeah, that's a good point too, by the way, Don. You could be a fiduciary and still overcharge people because we see it on a regular basis too. We don't think you should pay north of 1% a year.
Unless you got maybe 1.25%, but 1 is about right. 855-935-TALK. Call us if you have a question. We want to save you a lot of trouble, and it's better if you call before you get in trouble than after, but you can call after too. You can also send questions in at talkingrealmoney.com. They don't get answered immediately. It's usually a couple of weeks later that we get to them because we have so many that you type in. Like this gentleman from California who, I don't even know where this place is. He says,
What?
Good day.
What's the place?
You don't know where it is either.
Yeah, I do. I'm a native. Sure, I do.
Where is it?
Know, right. That is out south of Yosemite.
Oh, damn, he's good.
Yeah, thank you.
He is good. He nailed it. That's good.
It's a beautiful place. Sure.
Okay, he says, good day, gentlemen. I just found you guys about a year ago, and I've listened to a few hundred episodes since. Kind of boring in Mid-Pines, California, apparently, this time of year.
Sorry. Yeah, that's
Well,
a lot
he's probably
of
snowed
episodes.
in.
I bet the weather is inclement from time to time. Yes.
Okay, he says, you're almost as funny as Click and Clack. Almost?
Whoa.
Almost?
Kind of hurts.
They're dead. At least one of them is.
Well, wait. Is that our new thing? Funnier than dead
Funnier
guys.
than dead
people.
Okay. But
right.
I'm more interested in personal finances than I am in fixing cars. Plus, those guys retired already. Well, at least one of them died, too. Retired and died. I live just downstream, as Tom said, from Yosemite National Park.
There you go.
I'm 52, plan to retire at 60. Took a risk quiz, scored 80. Both my wife and my parents recently passed, and we can expect a substantial $600,000 inheritance.
His
shortly.
wife recently passed?
Both my wife and my parents. There should both my parents and my wife's parents.
Both sets
my
of parents recently passed. Okay, got it. I thought it was kind of like my wife died, my parents died. Okay.
I'm feeling really bad about this whole segment. It's just kind of dark. There's a lot of
At least
death.
I got the location right.
There's
we'll
a
go with
lot
that.
of death in this segment.
Yeah. Okay.
All right.
Go ahead. Is there an actual question involved here?
Not for another
There's
4
a
paragraphs.
time limit. Come on, really?
Yeah,
All
he
right.
says, I started thinking about going full Merriman.
Yeah, that's something that I wouldn't figure on either.
He's going to go full Merriman.
Not if he knows Paul the way we do, but okay.
I have heard you speak favorably about the government's TSP. We have about...
Sorry. All I can see is full Merriman now.
Yeah.
This is not a good picture, by the way.
Yeah, exactly.
So.
Because I'm thinking that movie, and I'm just
No,
thinking,
not the,
I don't-
no.
I don't want the full Merriman. I just don't.
He's probably listening. He just drove
We
off
will-
the road into a tree or something.
He said, I've heard you speak favorably about the TSP. We have about a third of our investments in TSP, a third at Vanguard, and the next third
I'll never
coming
get
soon.
past the full Merriman. I don't know
I'm
what the rest of
sorry.
the question is, but okay.
Now be quiet.
All right.
Just suck it up. We have a mix of traditional and Roth IRAs at Vanguard, and the same holds with my TSP. We currently max out all contributions as Roth, but the government's match is always trad or traditional. My first question is this. What asset classes should I keep in my TSP, and what should I pick up elsewhere like Vanguard? How do I optimize the TSP to make it do what it can do best?
I love the TSP bond fund because those are bonds that are actually sold only for that fund. And it's very inexpensive. So that might be a
So you would
starting
say
place.
that would be the best place to start with a bond
Probably.
the bond
Yeah,
portion of
no,
your
I mean, it's
portfolio.
a wonderful, it's a good portfolio. It's U.S. government bonds.
And
short
then maybe
intermediate term.
use that because of the low expenses for for like the C,
the S&P,
the C and the C and the S fund. Maybe no,
maybe not the small
not
because
the
you
small,
can get
'cause
that
you
better
get small
somewhere else.
value. Yeah, you're right.
Mm-hmm.
So bonds and C shares.
Yeah, that's
Bonds
probably
and C.
about right. Sure. Mm-hmm.
Not C shares, C fund. All right. Second question is don't ever buy C shares. They're really expensive.
No, please.
My second question is why have I not heard about M1 Finance before? Is this for real? Can I just dump, say, the whole inheritance into a pre-made ultimate buy and hold 80-20 portfolio and walk away for 30 years with no fees? Really? This is what he says. That sure seems too good to be true. And it nearly automatically rebalances every new contribution.
That's the part I'm not sure of, but and you got to pay the cost of the securities you invest in.
Yeah, but what if they're free? What if they're ETFs? What if they're
ETFs aren't free. There's an expense ratio to them.
Oh, there's an expense ratio.
Yeah, right. Yeah.
No commissions.
Nothing's free. Yeah, no commissions. I don't know what M1
he's
offers.
Not done yet. He's not done emoting. We got to finish his emoting. He goes, wow. I think it even buys fractional shares automatically if I have at least $10 in the settlement account. That sounds like the best thing since sliced bread. Thanks for
best thing since Fisher Flour's sliced bread.
Sliced bread by Fisher Flour. Thanks for doing what you do with no baloney. I'll keep listening. Plus, I already recommended your podcast to all my friends. Too bad I didn't find you when I started my government
Wait a minute.
career.
All my friends? He lives in the middle of nowhere. He probably has, a deer and a bear for friends or something?
My first audience at Business Radio Network was elk.
You had crickets on one night.
The M1 thing is true. It is good. It's good. Do it. Have fun. Thank you for your question. Be right back.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
And if you want some guidance, if you're looking for some more involved help about, whether you should go full Merriman or not, then you might want, good thing Tom's not here right now. You might want to set up an appointment with one of our truly 100% fee only fiduciary advisors that's free, that has no obligation, and we won't pitch you anything. There's no high pressure sales pitch. You can just set up an appointment with one of our advisors at Vestory.com. That's Vestory.com. And they'll sit down with you for up to an hour. In fact, Tom even shows up for him sometimes, like he did. He surprised somebody today and called them. And they went, what? This is Tom? So go to Vestory.com. That's Vestory.com. Vestory.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.